The 200-day moving average is in play for both the broader stock indices, the S&P index and the Nasdaq index. I'll talk about those technicals in this video, so let's get started. Let's start by taking a look at the S&P 500, and that index saw the price move sharply to the downside in trading yesterday. Where would we find support? Found support right against the 200-day moving average. That's a green line in this chart that comes in at 5728.27. Keep that level in mind, not only today but going forward. It's rising a little bit, so pay attention to that. Last time the price traded below its 200-day moving average, you have to go all the way back to this day right here, which is November 2023. That's a long time ago. So a break below that level would add to the bearish bias from a technical perspective and open the door for further downside momentum. On the downside, on a break, people would look toward this area right through here, which encompasses a number of different swing highs and swing lows, with swing highs through here, and then it became a support floor all through here before moving to the upside, coming back down, testing that level and moving toward our highs. So we haven't been back to this level since this point right here, which is November of 2024. That area comes between 5669 and 5688.43, and below that is a 50% midpoint of the move up from the August low right here to the high price that we saw in 2025. So those are all the targets on the downside. Now, on the upside, we're going to need to get above this swing area up through here. I'm going to outline it right here. This area comes between 5853 and 5878. If the high price of trading here today or yesterday came up into that area, found willing sellers against that level. So getting back above that level would be needed to increase the bullish bias for the pair, and then we start to look toward the 100-day moving average. Now let's take a look at the Nasdaq index next, and I mentioned the 200-day moving average. In this case, the price fell below the 200-day moving average and has traded below it in the last 3 trading days, 1, 2, and 3. And the difference in trading here today is that the high price so far has been able to hold resistance against that 200-day moving average, which currently comes in at 88,384.88. The current price is trading near this 18335 level, and the high price today came in at 18353.10. So we've been able to stay below that 200-day moving average, and as long as the price can stay below that 200-day moving average, the sellers remain in play for the Nasdaq index. The buyers need to prove that they can take back control by moving above that level. On the downside for this pair, there's not only a swing area right through here, but also the 50% midpoint that comes in at 17956.56. And trading yesterday, the price came down toward that 50% midpoint. That's of this move up from this August low to the high price that we saw in the end in December of 2024. That was a high for the Nasdaq index, and if the price were to move below that level, that would open the door to the downside. So right now, the sellers are more in control below the 200-day moving average with the 50% retracement. On the downside, another key target for this index. So there you have it. A look at both the daily charts for the S&P and the Nasdaq index. The S&P trying to hold support against the 200-day moving average. The Nasdaq index trying to hold resistance against that moving average. We'll see which bias wins out. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.